Here we go. We are live and good morning, everyone. Good morning, afternoon, good day, wherever you're tuning in from today. It is an absolute pleasure to speak to you all. I'm so excited for this live stream. I know it's been a while, but it's great to be able to connect once again, chat about everything that's happening on the markets. There's been a lot playing out. Today, we're going to be discussing three major things that we need to know and we need to speak about as we head into the upcoming week. Of course, from the Federal Reserve rate rise last week, the UK tax cuts and all of those potential implications for markets, as well as some other discussions about the US dollar. There's a lot of things on the macroeconomic lens. We'll talk about where markets are currently positioned. As we know, we're currently looking at what is quite an interesting start to the week. The ASX is going to be one of the first global markets that opens up. Its futures were down negative 1.25% at the back end of last week. US markets were weaker last week as well, negative 5-ish% on the week, negative 4.7% on the S&P 500. We know there are a range of different things flowing through. Of course, we'll talk a little bit about Europe. We've just got back from Europe. We were traveling there. We did about 6 to 8 weeks over there, back in Australia for a couple of weeks before moving back over to Europe in the next couple of weeks. I'll talk about where we've been, what we've been doing. We'll chat about life. As you can see, we've got a new background. This is actually only, I guess, part one of the new background set. We will have a moving background. It's like a design studio, but I need to get a green screen for that. So I'm going to get the green screen sorted once we move over to London. But for now, this is kind of the start of it. It moves around. It gets even more funky once we get it there, but I thought we'd get it. I know there's a little bit of like a split with the lights on the outline, but hopefully it keeps it a little bit exciting, especially as we move around Europe and we go to different places. I thought it'd be nice to have a continuous and sustained set for us all. I miss you all. I hope you're all going well. Happy Monday, wherever you're tuning in from. I'm really excited to just chat about things. We've got a new structure for the live streams as well. You'll see how they go as we go through this live stream. The aim is, particularly as we move over to Europe and on different time zones and things like that, I'm just going to be dropping live streams whenever there's exciting things to talk about. So if there's news about lithium, if there's news about kind of earnings, if there's news about different company reports, macroeconomic news, I'm just going to drop in live streams whenever. So make sure you've subscribed. As you guys know, turn your bell notifications on. With your bell notifications on, you'll be updated whenever we go live. And obviously, if you missed that live session, you'll be able to catch up on it basically whenever you want. It'll just be sitting there on the channel for you to look through, and you'll still be able to connect with the live chat through it all. Hope you're all going well. Before we get into the market news and everything that's playing out, let's say good day, let's say good morning. I hope everyone's going well. And then, we'll chat about market news in the next couple of minutes as people get into the stream. Gagan Deep, morning, mate. How you going? Welcome. Hey, Deco, great to see you back well, mate. Still keeping up with the videos. We've been dropping plenty of videos across the board. On the ASX Investor channel, we've got lots of CEO interviews. I'm going to be doing deep dives into videos. We did our first one on the Patagonia founder selling his shares. I'm guessing you guys might, selling his company or giving it away. I'm guessing many of you might have seen that news, but that was like the first deep dive video we did. We're going to do plenty of those. And then on this channel, it'll be focused on like streams, news, and everything on that matter. So great to have you, Deco. What are you rating? The end of the world is just the beginning. Shaping up for a particularly rough decade. There's a lot of those types of calls, isn't there, at the moment? The lost decade, or what's going to happen. It's an interesting one. It is an interesting one, and we'll chat about it all. Hey, Zaki, welcome, mate. Hope you're going well. El Senor Lithium, let's go. There's a lot of interesting news, and we've actually got, I'm going to be filming a lithium video, which will go probably on the main channel. It's going to be a deeper dive video very, very soon. So, we'll unpack all the lithium demand drivers on that. Stay tuned. Pat Dime, hey, welcome back. It is about time that we're back, mate. Hope you're going well. Bullish on commodities super cycle. I think, as you've said, most people agree that, there is a commodity super cycle either underway or impending or up ahead. But the interesting one is the divergence probably comes in how we get to the peaks. Do we have kind of the retracement down? You guys can see the globe. The globe's still there, that same globe. But do we have the retracement downwards and a bit of a reduction in demand based on like recession and global downturn, or does it just stay strong all the way through and maybe that's a safe haven to hide in? So it's an interesting one. Hey, Ken, top of the morning. Welcome. Favorite city in Europe? It's a good question. I think I'm a bit of a sucker for Barcelona. I love everything about it. It was the second time I've been to Barcelona and just loved it. It reminds me a little bit, not exactly like Melbourne, but there's just so much like different, I guess, aspects of it. You know, if you love your sport, there's obviously the Camp Nou and all of that. If you love your beaches, my partner, she loves the beaches, so like that was perfect for her as well. If you love the culture, it's obviously like a very historic city as well. The people are very nice, like a nice pace of living too. So I really enjoyed Barcelona. But heck, you know, there was a lot of good ones. So we did Malta, Spain, Italy, Greece. Actually, I really enjoyed Greece as well. Santorini was a dream. I think that was what we did, and Portugal. So they were the 5 countries that we went to. Mark, hey, how you going? Welcome back. Great to have you join us, mate. Good morning. Interesting period for us all to learn from. It is, Leo. It is 65% cash waiting. Nice, mate. Hope you're going well. Waiting to reach your goals. What are your goals, mate? Hey, the background. It's part 1 of the background, but yeah, we'll continue to upgrade the background and the set. But I'm excited. We're getting kind of creative with the video editing and things like that as well. As you guys know, we've been talking about it for a few months. The aim is to continue to uplift the quality of the videos each and every day. I think we're getting better at the editing. We're getting the sets. We're getting the visuals and things like that. So stay tuned. Plenty coming. Different background. Thought we'd change it up. How you going, Lane? Welcome. Hey, Lex. Welcome, my man. How you going? Hope you're going well. Like the background, edited. Welcome too. Thoughts on Zip? I haven't been keeping up too much with the BNPL sector over this past period. I don't know where. I think Zip's currently sitting. It's below that dollar mark still, isn't it? What's been interesting is seeing. I think Cecil kind of has been quite explicit about this path to profitability. So has Zip as well. So I think kind of that's what the market's just waiting for now. Like, how long does it take to get towards that path to profitability? What does it look like, and are they able to continue to sustain growth? So I think that's kind of the main things that they're searching out for. Hey, Rossi, Maddie, how you going? Long time. Europe was great. We're heading back mid-October. Had to come back to Australia. We're working on a project for the business outside of YouTube. So yeah, it's been a big campaign. So I came back here for about 6 weeks. And then, yeah, we'll be back to London, hopefully to watch plenty of English Premier League in October, which will be nice. All the best. Hope you're going well as well, Matt. Hey, Loz, welcome, mate. Welcome. There's been plenty of good bouts, actually, as well, mate. I've been watching Cambosis. This is back end of this month. Plenty going on. Hope you're going well. Good to see you back. So I'm back for 4, it's closer to 3-ish weeks now in Oz. But we'll still be doing the live streams. Kind of what the difficulty that we had with the live streams when I was in Europe just recently, we were backpacking and traveling. And so there was never a consistent internet connection, because obviously depending on the Airbnbs and things like that. And I didn't want to start streaming and then it'd be laggy and it was a bad experience for everyone and it didn't work. But when we move back, we're moving to London and setting up there. So obviously there might be a couple of weeks until we get our place and get everything sorted. But then once we get wired Ethernet connection, then we'll be able to do streams whenever. So the streams will be kind of back now, but yeah, back in Australia for 3-4 weeks, depending on kind of how things fall out. Angus, hey, yeah, it is. Let's have a look at kind of how things are tracking. So as we mentioned, the ASX was down about negative 1.25-ish% for futures at the back end of last week. So the ASX is one of the first markets to open up, obviously New Zealand exchange as well. And then we'll move over across to Europe and, well, to Asia more broadly, then to Europe, and then ultimately getting over to the US. But it gives us a bit of a leading indicator about how things are tracking. We know there was a big fall on the Friday session for the US markets, negative 5-ish% for the week, 4.7%. As we can see here, we actually tested the June lows, bounced below, buyers stepped in. But I mean, like, when you look at the chart there, you can see kind of where we're placed. Very perilous position. This is a daily chart for the US 500, US Tech 100. You know, it's very similar there. So this is a NASDAQ. So that's where we're currently positioned. ASX just opened up now, obviously. So that's the morning session, about 1.4%, and around 1.5-ish% off to kickstart the session. Edited, lithium seems to be the future. Australian fire trucks going green to fight climate change with electric fire trucks. Amazing. Yeah, that Inflation Reduction Act was big from the US as well, talking about the focus on supply chains. But yeah, I mean, it looks like the electrification is occurring. And this is not just for vehicles. Obviously, vehicles are key, but electrification more broadly, it looks like it's really underway. What book are you reading at the moment? Actually, over the past 4 weeks, I haven't really had the chance to read too many books at all. But what do we get here? Let's see if you can see this. I was talking about this I did a video on it. Good to Great by Jim Collins. One of my favorite, it's going to be too hard with the background. But one of my favorite business books that I read, and I was pouring into that in Europe. If you guys are interested in, I guess, company development and how businesses develop, it was absolutely fascinating. So Jim Collins it's a seminal piece in the business world. Jim Collins essentially went with a really forensic and analytic approach to understand how companies succeed and go from good to great. There are many good companies, but how are those companies able to go from good to great? And he used this as like significant outperformance of benchmark indexes. So that it was related to the markets, but just looking at Fortune 500 companies that were able to sustain these successes over long periods of time. And they unpack kind of these key features that each of them had. And I think it can be really well applied to when we're looking at investing in company lenses as well. So I thought that was fascinating. Intelligent Investor, I've got that here as well. It's a chunky read, but definitely a lot of insight in it. Imogene, market sensitive announcement. Interesting. What was that relating to, Zach? Morning, mate. Can't find AETH. Can't find an emoji for the proper roller coaster. Yeah, it's going to be, it has the potential to be a bit bumpy. We'll have a look at going to Europe for a few months. Setting up over in London is the plan. So yeah, we'll see kind of how that works, but the plan is to set up there for a period of time. Alrighty, let's get into the 3 things to watch on the markets this week. As you guys know, I'm not a financial advisor. It's just a general discussion. That's a stock standard overview there. But what do we need to think about where we're at? And this is going to be the new structure for live stream. So what I think we're going to do is, obviously you guys have seen like the pre-recorded videos that we do with this type of style on this channel. But I was thinking, why not just make a lot of them or many of them live streams? Obviously, some of them will still have pre-recorded videos, but we'll have most of the pre-recorded videos and like the curated and the well done, really focused videos on the main channel. And here we're going to just have like lots of hot off the press news events where we can come together as a community, where it's like, oh, if the UK tax cuts came out, for example, on the weekend, we can just unpack that news together and chat through what we think are the main parts. Or if there's a big announcement from a certain company or a macro lens, I'll just drop in live streams whenever. If you're online, great. If not, you can just watch the playback and it'll be like we just unpack a pre-recorded video anyway. So let us know what you think about the new style. Today's is 3 things for us to focus on this upcoming week ahead. And so it's looking backwards as to last week, what were kind of the main focuses. And as we know where we're currently positioned, firstly, down by 4.7% last week. S&P 500, we talked about where we're sitting, charts testing the June lows. So that's where we're heading. And there's a lot of thoughts about back down we head. Is this going to be the one? And the major piece of news initially was the Fed raises 75 basis points. We did a video on this if you're interested in kind of a more deep dive into this. So you can check that out on this channel after this one. If you guys are interested, we've got plenty of videos on both channels. As you know, make sure you subscribe and turn your bell notifications on. We'll be dropping plenty of live streams, so don't miss those. But the Fed raises 75 basis points. The major thing here wasn't so much that the Federal Reserve raised rate. I think most of the market was pricing in a 75 bips rise, but it was more about the forecast. Jerome Powell was, all things being equal, more hawkish than anticipated. And there was a few key things here to take away. Firstly, more pain up ahead. Essentially, without explicitly stating it, it seems like the central banks are cognizant of the fact that we're heading into a recession. And obviously, they've got a lot of forecasting and data surrounding that. But essentially, as you can see from that bottom quote, no one knows whether this process will lead to a recession, or if so, how significant that recession will be. There are a few other choice quotes here: higher rates, slow growth, softening labor market. They're not as painful as failing to restore price stability and having to come back and do it down the road again. So it wasn't so much the fact that, yes, we got the rate rise, but it was more the fact that the soft landing looks more difficult. And as we talked about in that video, the future forecast, it was the increased rate hike cycle that they signified. So for this year, peak rates of 4.4%. This is the median average of what the Federal Reserve members anticipate. Obviously, each of them provide them with the dot plots. Peak at 4.6% before back to the longer run 2.5%. But it doesn't look like we're going to get there for the next few years, which was, I guess, a bit of a shock to the system for many people. Obviously, we got a reduction in terms of future forecasts for growth and economic output, as seen in GDP, a tick up in unemployment, and inflation not to get back to that 2% band that we know that they're aiming for until 2025 and beyond. And so that was kind of what left the market a bit shocked. And then we've seen with all of this, so this is the second part that's important to know, is this soaring US dollar. And let us know what you guys think as we go through these. But the soaring US dollar has a few important implications. Let me drink some tea quickly first. So first and foremost, At this stage, it seems like the dollar is serving as one of a few only safe havens. Obviously, we know that at different times in different markets, there's a range of different safe havens. Gold so far hasn't been really acting like that safe haven despite the inflationary environment. But the US dollar has been, and people have been speaking about that. But there are a few different results of that. Firstly, emerging markets, or really countries that have a high debt burden denominated in the US dollars, obviously have an increased debt obligation to repay. Obviously, companies and countries doing commerce, depending on kind of import-export focus and which currencies they're using, that has significant implications for those as well. But it also means that as the Federal Reserve they've been one of the most hawkish and really leading the line in terms of hawkishness since they've started raising rates. As they've been doing that, that's been driving dollar strength. And so other central banks around the world have been forced to defend their currency, or at least really consider defending their currency, because if they don't, they're just going to lose that purchasing power against the dollar. We saw the Japanese central bank intervene against the yen for the first time since 1998. So we're talking 20 plus years. That was major. That really, really was major. Obviously, Japan's been ultra dovish in comparison, but that was significant. And now, as you can see here from the second one, the central banks around the world are racing each other to step up their fight against inflation. There was more than a dozen central banks just that past week that moved to tighten monetary policy, and some were forced to hike rates to protect their dollar peg, including UAE, Saudi Arabia. So these have got pegs against the dollar, and obviously if the dollar strength continues on, they've got to defend against that. And then, for good measure, UK bonds and pound sank faster than any time in the past 4 decades. So this is, as you can see here, this in tandem plunge. So when both are plunging, it's what you see in EM, which is emerging markets. The UK is obviously a significant global developed economy. This is very, 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 very atypical. But there is a reason why this happened. And this is number 3 about kind of what to watch for this week. This is a US dollar strength, just to give you that indication about how strong it's been. So this is obviously over the past couple of years. But as you can see, really out of the base in mid-2021, but really starting 2022, the US dollar has just accelerated away. It's been absolutely soaring. And so moving on to kind of that third point is the UK fiscal support. This has attracted a lot of attention. It's kind of got a lot of eyes on it and a lot of questions about what the implications are from that. So first and foremost, what's essentially occurred, they are supporting, in the easiest way to sum it up, they are supporting the UK economy and trying to avoid or drag the economy out of a recession that they believe they're moving into. So there was tax cuts, a range of support, but obviously it's going to increase the deficit. They're raising $50-ish billion in fresh debt, which is around a third of the total annual borrowing needs. So this is significant scale. But the difficulty is, obviously, you've got fiscal support on one side, which in essence is going to be stimulatory as you try to stimulate growth. But on the other side, the Bank of England is trying to raise rates to curtail demand and cut down inflation. So you're almost pushing down on the accelerator while hitting the brakes at the same time. And so now everybody's like, well, what's going to happen? It's playing out live in front of us. And I guess the other query that people have is, what does this actually mean for those in need? Because obviously inflation as a regressive tax affects those on the lowest income quartiles disproportionately because it's a bigger proportion of their like weekly spend is going to be going on heating. It's going to go on energy. It's going to go on gasoline for your car. It's going to go on food. And so it doesn't seem to directly support them. Obviously, the focus is on trickle down economics, that as we stimulate the economy, it's going to flow down. But there was a lot of questions. And as mentioned, we saw this in tandem plunge essentially that saw a significant spike in yield with the biggest jump on record. And then the pound absolutely shrunk. I think the pound had its biggest, downfall against the USD since March 2020. So we're talking something significant there. And there's even questions now about, will we see parity between the pound and the US dollar? Just a few weeks ago, months ago, I guess now, we were seeing parity with the EUR or with the euro against the US dollar. And even that was like, wow. But now we're starting to see this coming across with the pound potentially. So there's a lot of thoughts there. In terms of what to watch, I'd love to know your thoughts on where you think we're currently sitting, because these are a few of the major things that happened over the past week. It was a really big macroeconomic week, but it is worth thinking that we are heading into October. Obviously, there's still a week left of September, but we're heading into October. And what will October bring? That'll give us quarterly earnings from the September quarter. And obviously, maybe we're going to see some more company specific or company centric news then. So October will give us the insights. What's the market waiting for? Realistically, it's looking for the potential of downward revisions. We know we've seen the retracement in terms of the price end of the PE multiple. The price multiple, on the PE equation. But the question is, what happens to earnings now? And so, look, earnings have been resolute. We've seen downwards revisions, and we've seen companies actually either withdrawing or downgrading their own forecasts just because of the uncertainty that's playing out. But how does this go into October? So that's a big thing to watch. Inflation, upcoming US CPI print for the September month. That's going to be big. It'll attract a lot of attention. Obviously, the markets will be waiting for the November and December rate rises for the US Federal Reserve. But heck, there's going to be a lot of discussions as well from other central banks in October. And then other economic data prints. As rates rise, central banks want to see an effect in the economy. That's what they're trying to do. They're trying to curtail demand and see that reduction. But you can see this in any manner of things. Obviously, inflation expectations, housing numbers, labor market, consumption, sentiment. All of these things are going to be important to track, but they'll all feed into one part, or each of them will be one part of a bigger puzzle. So there are a few of those big major things to really watch over this upcoming period. It's going to be a fascinating one. There's a lot for us to discuss over this upcoming next few days and weeks. We'll be dropping plenty of live streams, as mentioned. So make sure you've subscribed and got your bell notifications on. There'll be a lithium video over this next week. We've got a couple of CEO interviews over this upcoming week as well on the ASX Investor channel. So yeah, bell notifications on for all of those. I'm also just so excited to be back with the live streams. It's so great just to be having to chat again. I'm keen to unpack pieces. Hopefully, let us know what you thought about this format of streams where we go through news together and then we can kind of comment and share on those. Hey, Sensei, how you going? Welcome. Great to have you join us. Live stream must be in a parallel universe. 10:15 a.m. on a Monday on planet Earth. You are in the right universe and you are in a live stream. Welcome, mate. Peter, still optimistic. Hey, fantastic. Hope you're going well, mate. It's great to have you join us as well. Still have cash on the sideline. It's great to have you join. Happy Monday to you all. Obviously, we'll have a look at where things are currently tracking. So still around about that negative 1.5% on the ASX. Obviously, it'll be interesting to see what happens to the US markets when they open up tonight. Obviously, there'll be a lot of eyes on the UK markets, just due to everything that we discussed and I guess the uncertainty that will be flowing through on the FTSE. But at this stage, the real question is how are we going to hold around those June low levels? That is seen as a key area of support. Obviously, traded in and around that on last Friday's session. Then the buyers stepped in. If we go through that, when we kind of zoom out, you can see here there's a fair bit of kind of empty space below that on the chart. So these June low levels are going to be fairly important. There's going to be a lot of eyes on that over this upcoming period. And then there's also implications about everything that's happening in the Ukraine situation. Obviously, still has the ability to, is impacting the energy market too. So there are a lot of kind of things that's playing out on that front. Brenton, someone buy your house there. Hope you're going well, Brenton. Welcome. Pay up for Unity Wireless for the next 2 to 3 years. Nice picture, Sensei. You got a nice house there actually as well in your profile picture, like Brenton's. Uranium stocks taking a big reversal. Yeah, there was some real strength from the uranium stocks over the past month-ish, particularly when there was a lot of that discussion about like Japan restarting, obviously the need to diversify out energy supply and things like that. It was basically the last month and a half, but then we've seen that really heavy bounce. Energy over this past period has struggled over this past month-ish, like the rest of the market, but energy kind of has had that hit just because of its outperformance really in comparison to where it was and the rest of the market. So yeah, it'll be fascinating to see kind of once we see a bottom here, however long that's going to take, who's going to lead out of the bottom. Because we've had quite an interesting set of leads and changes over this past 6 to 12 months. Really, the strengths come through on the commodities and the energy side. And obviously, it started particularly in that June period. Everything was down past kind of June. So it'll be fascinating to see if we see that same thing where kind of nothing is really resolute. As we talked about in the slides, it really is only the US dollar that seems to be acting as this safe haven at the moment. So yeah, all eyes on that. Alrighty, guys, I have got to jump off to the next meeting after this for a 10:30 one, but I'm very, very excited to continue these streams. So stay tuned. As you guys know, bell notifications on. 2 CEO interviews this upcoming week on ASX Investor. Hopefully another live stream sometime later this week. Notifications on. You'll be updated when. Super excited to be back. It's great to be back. It's great to chat. Plenty more coming up. We've got obviously a really interesting run into the back end of 2022. 1 quarter essentially to go. It's been fascinating. There's been ups, there's been downs, there's been lefts, there's been rights. But well done for everyone who's kind of stuck at it. Hopefully you've taken some learnings along the way. And hopefully, you know, at the end of the day, it's made you a more informed investor because experience is what's going to help to develop that. This year, it's almost been like in Melbourne, you know, they say we get 4 seasons in a day. This year's almost had, you know, 4, not black swan events, but 4 uncertainties or 4 different kind of types of macro pieces of news in a year, particularly when we compare it to the past 5-10 years, which has been essentially stable and obviously fueled by free money, low interest rates. This has been a very, very interesting one. So there's always opportunities to learn and take away from that. Alrighty, guys. We'll catch you soon on another live stream on this channel. Big thank you for joining us. It's great having all the regulars popping back in and those who have joined us for the first time on the stream. This is how we do it. We unpack plenty of news, plenty of videos for you to check out after this one. Lots of lithium pieces of news and macro news on this channel. Range of deep dives on the ASX Investor channel. You can check out the Patagonia CEO video. I thought that was a really, really fascinating one on that channel too. Big thanks for joining us. See you soon for another live stream. And for now, stay well and happy investing.